Well, markets are set to close lower today after disappointing results from retailers such as Staples and Urban Outfitters. Meanwhile, small caps have also been sold off. Now we're joined by Matt Cheslock. Matt, we did open lower, but losses deepened through the day. What was driving that?
Well, I think the retail numbers obviously have just caused a bit of concern for people. Is the consumer really going to step up in this environment? We've been expecting them to do this all along, to hold us up. Maybe they're going to back away a little bit. Market may be due for a little bit of pullback.
Now we're almost halfway through the year. The S&P is up barely over 1%. What do we need for it to push strongly higher? Are we waiting for, say, second quarter GDP for confirmation of better economic growth?
Well, we keep looking for the confirmation for the growth or the expectations. We've forecasted that the second half of 2014 would be much better than the first half. Obviously, the weather in the first quarter obviously is going to put a big damper on what we expected. So the numbers could be a lot bigger in the second half, and that could drive us higher if that's going to be any kind of indication.
Now, what do you make of action in Treasury markets at the moment? Does it suggest caution over the economic outlook, or is it more about stimulus expectations?
Well, we've seen some massive money come out of stocks and into bonds recently, so I think people are more focused on a little bit of safety now, protecting their portfolio. So I think people are concerned about the economy as a whole. That may be short term, it may be sell in May and go away kind of stuff, and maybe they'll ramp up again and as we get to the fall. But it's certainly something to look at least the bond flows right now.
Thank you, Matt. That was Matt Cheslock of Virtue Financial, and I'm Jane Searle for The Street.